From Kansas State University, this is Agriculture Today. Eric Atkinson here. And coming up today, K-State's Monte Vandeveer will talk about how the Pasture, Rangeland and Forage insurance program works. With the enrollment deadline for the 2019 growing season coming up soon, he explains how pasture and forage losses are calculated in this coverage, and he points to an online tool that helps you producers calculate the potential payout. Further ahead, Sarah Moyer visits with K-State's Jim Nelson about the 2018 Swine Day at K-State, set for 2 weeks from tomorrow. It will feature a session on implementing the Secure Pork Supply Plan in Kansas. Also ahead, this week's commentary on rural Kansas from K-State's Gus Vanderhoeven. That's our lineup on this Agriculture Today. Agricultural producers, landowners, and creditors, you have a partner in your legal and financial needs. Kansas Agricultural Mediation Services offers reliable, trusted information and guidance. Whether you need advice for ag credit concerns or are transitioning your operation to the next owner, Kansas Agricultural Mediation Services can assist you in making sound decisions for your business. To learn more, call 800-321-3276 or visit us online. Thanks for being along with us. You're listening to Agriculture Today. Well, we'll talk about agricultural insurance options once again and be more specific. A product that's been out there for almost a decade now. It may start to hit its stride here in Kansas. It's called the Pasture, Rangeland and Forage Insurance Program. And one of the K-State economists who's been working with and on this program for some time now is joining us here. He is Monte Vandeveer, Research and Extension Agricultural Economist for K-State, based in southwest Kansas. Monte, this is an insurance product that has flown under the radar for quite a while, but because you talk about it so much, you obviously believe it does have a niche in helping producers in Kansas manage their risk.
Yes, the PRF program's been around for several years now in Kansas, but we still see much lower participation among eligible acres, at least, in Kansas and most other states. It's not a product that many producers are familiar with.
Our purpose today is to correct that and let folks know more about it. Explain the basic idea behind this form of coverage, if you would.
Well, the Pasture, Rangeland and Forage coverage it's an RMA product. It's sold by the same folks that sell your traditional multi-peril crop insurance, your private crop insurance agencies. This insurance product is designed to cover grazing and haying lands. So that's your permanent pastures, and that's also your perennial hay crops like your established alfalfa or your established grass hay meadows, the grass that you cut for hay. There's a lot of that in eastern Kansas, so that's important too. But it's a way to ensure your forage production, and we haven't had another product for that in the past. So this is what RMA's put together to fill that niche.
So it covers the potential for coming up short on forage in a given year, not unlike we saw here in Kansas in numerous places in 2018, right?
We had lots of places in Kansas, and it depended on the season. Out southwest, it was dry early, and as you got further east, it got dry late. So the idea is the insurance will provide monies to buy replacement feed. We've heard so many stories of cattle producers who built up their herds, and then when a bad year hits, they have to sell off just because they don't have money to buy feed.
We do want to visit about the mechanics of the program, but before we go any further, to point out, it's timely that we get into this because there is a sales closing date for this insurance coverage rapidly approaching, Monty.
It's November 15th. Yeah, it's kind of funny that we're talking about next summer's grazing here at the beginning of November, but the PRF coverage period runs over the calendar year. Starts in January, runs through December. So the sales closing is November 15th. So that deadline's coming up pretty fast.
Now, how one determines that the forage on any given year from any given resource is short of the norm. Again, we don't track that regularly like we do crop production. So what is used here to make that determination?
Well, you've got it exactly right. On the crop side, we have our crop yield histories that our insurance coverage is based on, but especially for our pastures, we don't have anything close to the same accurate kind of yield records. So what RMA came up with was insurance based on rainfall. And the idea is that precipitation is going to be a pretty good proxy, pretty good indicator of where our forage yields are going to be. It's also something that's easy to measure, and so it's a good candidate for using for the insurance coverage. So the idea is the insurance, you can guarantee from 70% up to 90% of your historic normal rainfall for a given 2-month period. They call that an index interval. So if your rainfall for that period falls below the guarantee you've chosen, then the insurance payment kicks in.
Identifying that rainfall amount, though, does one go by producer records, or is there some other method here?
No, they have to base the rainfall on official government, the readings at the official government weather stations. So the way it's organized is the state is divided into grids, and that's like a 1/4 degree longitude by 1/4 degree latitude. Turns out that's about 17 miles north to south, 13 miles east to west, roughly. And they pick the 4 closest government reporting stations to the center point of your grid and come up with a weighted average. So the closest stations count for the most in developing that composite rainfall figure.
And you said that amount is weighted depending on an individual's distance from the center of that grid. Is that correct?
Right. So the closest station gets the biggest weight, and the farthest station gets the smallest weight. It's all based on the relative distance. And the idea of using 4 stations is to sort of level out that hit or miss aspect that we've all seen in looking at rainfall. We know how it can be different just a few miles down the road, and the idea of using multiple stations is an attempt to reduce that hit or miss quality.
So determining the normal rainfall on the grid is one component of this, but there is yet the other, and that is producers have alternatives as to the time periods they wish to apply that coverage?
Yeah, that's probably the most complicated part of this coverage is making that decision. The year is divided into 2-month intervals, so that's January, February, March, April, and so on. And you have to pick at least 2 of those intervals for covering for your insurance. So the insurance is based on the rainfall during the periods you pick. Mm-hmm. If you have a warm season pasture or a cool season pasture, that could influence your decision on that a little bit. So you have to pick those time intervals that you want to insure and then allocate your coverage percentage terms across those periods.
So the allocation can be quite flexible, it sounds, across the selected periods. Is that right?
Right. You can put as much as 60% of your dollar coverage in one interval. Minimum is 10%.
And again, as far as selecting those time periods, one has to be strategic as to the point in the year when that rainfall is most critical to the forage productivity.
Right. And all of our range science research indicates that rainfall during the growing season is most important, and of course our intuition says that too. Looks like rainfall toward the early part of the growing season, I think May, June is what some of our statistical research shows as the strongest correlation between final forage output.
And as far as that allocation, really no real preference as to how one spreads that out over those periods as per the research. That really is dependent on location?
Well, again, that's going to be a cool season, warm season factor there. That could be important. There's actually different strategies that producers use. One is just cover the growing season. So you'd pick 2 or 3 intervals in the warm part of the year. Another strategy people use, though, is to, I guess you'd say, cover your premium, meaning they'll put a little bit of coverage in every period throughout the year. What that amounts to is giving them the highest chance of collecting a payment. Mm-hmm. And so from that standpoint, they've got a better chance of covering their premium and not owing any premium money at the end of the year.
Since you bring up premium, before we take a break here, a finer point that deserves mentioning, the share of the premium covered by the government, what is that? That's important to know.
Well, this is another one of RMA's products where the government pays a significant portion of the premium. At the highest coverage level, I think that's 90% of normal rainfall. The government's still paying 51% of the premium. And as you move towards lower coverage levels, then the subsidy rate increases up to 59%.
But either way, it's a significant portion of that premium. And in as far as the payments themselves, and we won't go into a load of detail here because it becomes rather complicated, but that's determined by the county base value of that forage production per acre. That is set by the RMA, times the productivity factor percentage, times the guarantee level percentage, which gets you to a dollar amount of protection, which then one multiplies by the total insured acres to come out with the actual policy payout.
Right.
Monte, if you'd hold on for just a moment, we need to step aside for a couple of minutes, and then we will return and tell producers about an online tool they can utilize to take a closer look at this program and put the numbers to whether or not it would be a benefit to them. That is the Pasture, Rangeland and Forage insurance coverage that Monte Vandeveer is telling us about. He is a K-State Research and Extension agricultural economist, and we'll return with Monte and with more on this topic on Agriculture Today.
Agriculture and food systems are the main drivers of the Kansas economy, but must be improved in order to feed the world's growing population. How are we going to do so? Reduce food loss, find ways to preserve grasslands, and help families stretch their dollars. Global food systems is one of the 5 grand challenges K-State Research and Extension is addressing. To learn more, visit www.ksre.ksu.edu.
Agriculture Today is back now on the K-State Radio Network, and our guest via phone from his office in Garden City, Monte Vandeveer, K-State Research and Extension agricultural economist. And what we're focusing on with Monte, an insurance product that he has studied and analyzed very thoroughly in recent years as an alternative for you producers who would like to insure your forage resources against adverse conditions. It's called the Pasture, Rangeland and Forage Insurance Program. And Monte, we were talking about its attributes here before the break. It's a rather involved coverage mechanism here. The Risk Management Agency has come up with a tool on its webpage that can really help a producer sort through what this particular product can offer to them, correct?
Yes. We've been talking about all these different options that the producer has on their insurance coverage, and so we have this online tool available from RMA that helps producers look at all their options, and it's very, very helpful. If you do a web search and just search for RMA PRF coverage, you should get a link to RMA's PRF main web page, and the link to the decision tool is near the bottom of that page.
Now, it would be difficult for us, needless to say, to demonstrate how this tool fully operates here on the radio, but can you give us a basic notion of what that tool does once one logs into it?
Yes, once you get in, first of all, you get to look up your grid. We're talking about the different grids, and so you can type in your location and It'll come up with a map, and you can figure out which grid you're located in. The tool also shows for each grid a rainfall index history going all the way back to like 1948 for every single period. So you can get a really long-term perspective on which periods have been dry and which time periods might be the best to insure.
Mm-hmm. And you can plug in your own information from there, acreage, that sort of thing, right?
Right. You can plug in your own acreage. You can adjust the dollars of coverage per acre. Probably the best feature is it lets you experiment with the different time periods, the different index intervals, and the different allocations of coverage across those intervals. So you can see how your coverage would have performed in a particular year. Say 2012 was a bad year all across the state. Plug in your coverage and see how the tool will show you how the coverage you picked, not only what it would have cost, but also what it would have paid out in any particular year. So it's a nice tool if you have some bad years in mind to see how the coverage you're considering might have performed.
Have a look at that calculation tool. It's very handy, very easy to use. It's at rma.usda.gov, and simply search for the PRF tool there. In fact, you'll be in attendance, not necessarily presenting, but on board at the crop insurance workshop in Salina that K-State is co-sponsoring this coming Thursday. So if folks have questions for you about this, you would be around to help them out with those?
Yes, be happy to talk to anybody there. Or another option would be looking at the Ag Manager website. I believe we just posted a webinar that we recorded recently for our Kansas Farm Management Association economists, a training video on the PRF coverage. People might be able to find that. It lasts about an hour. We walk through all the details on this decision tool and look at an example for how it would work in a particular location. So if people have time, they can check it out there too.
Excellent. agmanager.info. But in closing, Monte, once more, it's been around since 2009. You would like to see more producers who are concerned about managing their risk with their perennial forages to take advantage of this product.
Well, I think it's a tool that a lot of people need to take a much closer look at. It's a little bit complicated. You have to figure out the grids and indices and all those features, but I think it's going to be a pretty good risk management tool for a lot of folks. So hope they get a chance to check it out.
Very well. The sales closing date for Pasture, Rangeland, and Forage insurance coverage for the upcoming year is on the 15th of November, 2 weeks from tomorrow. And, Monte, we appreciate the input on this. Thanks for covering it all with us right here.
My pleasure, Eric.
That's Monte Vandeveer. He is a research and extension agricultural economist at K-State who has logged a lot of time and research into the Pasture, Rangeland, and Forage insurance product. And we do want to let you know briefly here about another agricultural risk management option that you producers might consider. It, in fact, will be addressed directly at the aforementioned crop insurance workshop this coming Thursday in Salina. It is called Whole Farm Revenue Protection, and one of the reasons it will be highlighted is that one of the workshop organizers, K-State Risk Management Specialist Art Barnaby, has discovered that this whole farm revenue protection coverage might have added value to producers in circumstances where their field crops were confronted with issues at harvest time. Art explains.
I've taken a second look at this contract based on some information coming out of the Pacific Northwest. And where they're getting growth in this particular contract is from people that are wheat barley growers. Some of you are going to discover that you're getting docks at the elevator for quality losses.
Quite a few folks have already,
alpha toxins,
right.
Alpha toxins, low oil content, all kinds of things going on there. And it may not be sufficient to trigger your insurance contract for quality loss. You have to meet certain criteria there. And if you don't have yield loss, it's quite possible you won't get any payment, even though you're taking substantial dockage on it at the elevator. What this contract does is it pays based on your actual cash price. So if you got a low cash price because of quality issues, basis is another one. Another reason why the Pacific Northwest probably jumped in on this before anyone else is their wheat's a long ways from delivery point out in Washington State and Idaho. Not only that, their wheat goes down the Columbia River to Portland for export off the West Coast, which is the place you don't want to be with all this China stuff, right? So they can get some real crazy basis issues out there, which are not covered by the crop insurance contract because it pays off of the board price or something close to it. Now, we do adjust a little bit out west, but it still leaves a lot of basis risk out there. Again, you're getting paid on the cash price you received, not the guy down the road. So it's a way to cover some of those risks that are not covered by the insurance contract, and it's going on as a supplemental. An umbrella policy is probably a better term for this because it is an umbrella over all your contracts. So these guys would have a wheat contract, and they'd have a barley contract, and then they'd have this overall whole farm contract on top of it. Now, your underlying coverage, individual coverage like RP, will count against the whole farm guarantee. But because it does, that reduces the amount of liability or coverage you're actually buying under a whole farm plan, and therefore the additional rate is really low. Now, I understand if you're writing the check, there is no cheap insurance out there, but the person explaining all this to me called it cheap. It's cheap relative to other premiums you're paying. The other big factor is the government pays 80% of the premium.
Which exceeds what normally is paid on the other product.
Most of you are getting 55% or so, maybe 59% of your premium pay. They pay 80% on this. It is the same subsidy rate as what's on the enterprise units that we've talked about before. So with that in mind, I think it probably has some relationship here. Not only do we have this issue with non-compensation for quality losses that we get docked for at the elevator, but we also have this business with basis. Everybody remembers 2016 wheat, where you were selling wheat that you normally expect maybe be $50 under the board. You were selling it for $1.50 under the board. Again, this contract, unlike all the others, is settled off of the actual cash price you received, and so therefore it's going to capture that reduced or unexpected basis, if you will. Now, it's tied to your tax returns. Mm-hmm. Is your tax returns simple?
This is a complicated program.
It is because it's a tax return tied thing to it, and people selling it and working with this don't typically work with taxes, including me. I don't fill out my own tax returns, that's for sure. So that is the downside. So if you want to make use of this, or if I described an operation or issues that you've had trouble with, you're going to have to do some education here to see how this works. I won't say it's not that complicated, and it's short of filling out a tax return. It's not quite that extreme. But it's still, because of that, yeah, you're going to have some things you're going to have to learn. And Eric, we would suggest the best way to learn that is to start with our workshop.
Art Barnaby of K-State Research and Extension there. Again, this 2018 Crop Insurance Workshop in Kansas will take place in Salina tomorrow, November the 1st, at the Events Center there. And you can register at the door if you haven't done so already. That registration starts at 8 o'clock, the program itself at 9. And to note, the final workshop in this series is set for the following day, Friday, November the 2nd, in Enid, Oklahoma, at the Autry Technology Center. Very same program at that location. You can find out more about these at agmanager.info. We'll return after these moments away. You're listening to Agriculture Today.
What is radon? Home exposure to radon gas is the leading cause of lung cancer death in the United States for non-smokers. In Kansas, 1 in 4 homes will test at or above the EPA action level. The Surgeon General recommends all homes be tested and fixed if necessary. Visit kansasradonprogram.org for more information. Test, fix, save a life. This message brought to you by the Kansas Radon Program, the Kansas Association of Broadcasters, and this station.
Welcome back to Agriculture Today. I'm Sarah Moyer. The Department of Animal Sciences and Industry will be hosting another industry event in mid-November. This time, the swine industry will be featured during the K-State Swine Day. K-State swine nutritionist Jim Nelson joins us today to talk about the event. Thanks for coming on, Jim.
Sarah, thanks for the opportunity. We're getting excited. The event's just a few weeks away now, and so we're getting very excited to get our friends and family from across the Midwest back to Manhattan, Kansas.
There are some big topics this year in the swine industry, so of course the K-State Swine Day will be discussing some of those. But let's start out with what the morning program will be looking like here on November 15th.
Well, I should point out that we opened the day with a trade show, and that's our industry friends bringing in and showing their latest technologies and opportunities, from equipment to feed formulation to environmental products. And so that starts at 8 o'clock in the morning, but the actual program starts at 9:15, and all this will be held at the K-State Alumni Center here in Manhattan, Kansas.
There are some rotations about different swine research topics. What will that look like when attendees come to the event?
Yeah, Sarah, what we do in the morning program traditionally, and we've done this for now 5 or 6 years, is release the latest research on swine, typically nutrition, but it can be reproduction, feed processing, other areas in the morning. And we rotate our faculty every 15 minutes. So it's a very boom, 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 quick information. Sometimes it's new research that's just being released. Others is follow-up from years before. All of it has the tone of what producers can use now in their operations to either secure their feed, increase productivity, and hopefully in the end increase profitability of their operations.
What's the benefit for producers who attend this event and hear about the research versus just reading about the research later on their own?
You know, it's interesting. Some of the research, some of the trials are wrapping up right now. And so your question is great from the standpoint, why don't I just read it versus hear it? Well, the point is you get the latest information a year ahead of everybody else, because as those trials are, as you know, at Kansas State, as those trials are summarized, it goes into a PowerPoint presentation. You see it right now versus waiting a year for a student or a faculty member to write that report. And so you get a year's leap or a year head start on the competition in the industry in terms of opportunities for you to increase profitability or change your production based on research at Kansas State University.
There'll, of course, be lunch and another opportunity to browse the trade show. Then an afternoon program will kick off. And what are some of the presentations that producers and people attending can expect during that afternoon?
Well, as you know, diseases in our industry have been a challenge for a number of years, and the latest one to hit, at least in China, has been the African swine fever, and now it's spread across Europe. It started in China in early August. That's when the first reports came abroad or came to our research team. And so for many years, knowing that we got emerging diseases as well as diseases that could affect our food supply, we've been working not only with our producers but also the Kansas Department of Ag. And the first presentation in the afternoon will be presented by the Department of Ag, talking about the implementation of a secure pork supply for our Kansas producers. And, it's one of those fearful events, but what if we had a sudden emergence of a new foreign animal disease that would change the way we produce? And especially logistically, producers will understand is how we transport hogs and get that population cleaned up that is infected. And so that will be the beginning of the afternoon, and I think that will be an interesting presentation from the standpoint what we can do to coordinate our events and make sure that we do things properly and not continue to contaminate our food supply here in the United States.
And a couple other presentations there. The question and answer session is, of course, an important time to have at the end of the day or toward the end of the day, as folks have heard a lot of information, and who will be present at the K-State Swine Day to help answer questions.
And the person to kick that off is actually our 2 o'clock speaker, Dr. Roger Main, who runs the diagnostic lab at Iowa State. We'll be talking about the laboratory tests that are being done and the new procedures that we have to find these diseases well ahead of any transfer to the bigger population. Roger got his PhD here at Kansas State University. Obviously, he's also a DVM. And they run, I've toured that lab a couple times, and they run one of the most
elaborate, intensive laboratories I've ever visited in my life. And so Iowa State is on the cutting edge, and we're blessed to have him come back. He is actually the laboratory director for the diagnostic lab at Iowa State University. And so that will lead into the questions then, what kind of testing can be done, which laboratories are the best ones to utilize, and that's exactly what you're talking about now is the question period that producers can ask their pertinent questions about what our future may hold.
There's not a explicit theme for the K-State Swine Day, but it seems to be that there's a trend of having some cutting-edge information, but then also making it practical for producers. After producers have enjoyed the day, there is a reception to follow, and of course, K-State ice cream will be present. That seems to be another trend for some of these industry events. Will you talk about some of the registration details for folks interested?
Yeah, we'll wrap up the day and send people home, as you mentioned, with Call Hall ice cream. The registration deadline for this year's event is November 7th. And so the event itself is Thursday, November 15th. The registration fee is $25, and you can register at www.ksuswine.org. If they miss the early registration, Sarah, they can come in late, register after the 7th. It's an additional charge. We double the fee to $50, but that includes the proceedings, the presentations, the lunch, the ice cream. I think it's a really good value for our friends and families across the Midwest.
And at ksuswine.org is, again, the registration site that you'll visit to sign up for the event. As Jim just mentioned, pre-registration, November 7th, and people are welcome to register at the door there for the additional fee. No charges for students who are interested in attending. Jim, any other comments about the K-State Swine Day?
Just so we're excited to have everybody back on campus. We're excited about this year's events and talk about the future of our industry. And the future is always a little bit of a challenge to people, but I think if we can sit around and visit about it, and what I like about we leave the lunch open for an hour and a half, is producers get a chance to interact with one another. And you know today, Sarah, in this world, people are so busy. The chance to sit down for an hour and a half and discuss issues that are pertinent to your business are huge. And so we welcome them back to campus and look forward to the opportunity. And thank you for allowing me to do this.
Thanks for coming on. And that, once again, was K-State swine nutritionist Jim Nelson discussing the K-State Swine Day on November 15th. Again, register at ksuswine.org. I'm Sarah Moyer, and we'll be back with more here on Agriculture Today.
Have you ever thought about where your food comes from? If you're thinking the grocery store, think again. Facts show that the American farmer feeds more than 129 people.
They are continually increasing and improving their operations. A wide variety of crops and livestock are grown in Kansas as well as the United States, providing food to your dinner plate.
Next time you see a farmer or rancher, thank them. For more information, contact K-State Research and Extension.
This is Agriculture Today. Stop, look, and listen. This is our state, Kansas.
When I wrote his wife, I had taken the time I needed to reflect on his life for the time I had known him.
That's Gus Vanderhoeven of Kansas State University with comment on life in rural Kansas.
They laughed a lot. They teased a lot, and they joked. But they all worked very hard together to make Kansas better, representing the university through the radio station, KSAC, as it was known at that time. There was Paul, Dev, and Ralph. And now the last one, Ralph, is also gone. An era has passed. Hold on to the memories. Somewhere there are tapes, old tapes, of radio programs I've done with each of them. When I learned that Ralph had died, I was thankful he no longer had to struggle with the complications of getting older. I thought of his wife and family. Clicking on the computer, I saw that messages could be left on the web. It felt strange to me. I could not do it. I, too, am too old for such a way to communicate during a loss. But I admit, it did take me a little while to respond. 2 weeks went by. However, during that time I was thinking. I remembered Ralph and working together. I remember standing behind him in line at the office counter of a park in Colorado, sneaking up to him and saying in the usual way, "Stop, look, and listen." Then he turned. "Oh, you?" and further banter. Now, no more. But hold on to the memories. They're good. When I wrote his wife, I had taken the time I needed to reflect on his life for the time I knew him. And I had made the decision, just as I've done with other friends, to plant a tree on the farm. It's not that there are not enough trees growing on the farm already, but this would be a special tree planted with care in a special location. By now, there are several trees on the farm in special places, odd corners, in memory of family members and friends. There are maples for Annike's brother, John, another maple for an Aussie friend who died, and there are more. I've told you there is one standing in the middle of a hay meadow to celebrate friendship with my buddy and his wife in North Carolina. The tree is growing well, as it should. The tree I decided to plant to remember Ralph would be a London plane tree I had grown this year from seed. Right now, it is close to 2 feet tall. It's a seed from the big tree next to the house. The London plane is like the native sycamore you see along our creeks and streams. It has smooth, light bark. I have a couple of big ones on the farm. The London plane likes moisture. I decided to plant it at the edge of a small, nearly hidden pond at the center of the farm. Earlier, a few years ago, I had planted several pin oaks in a rather mucky soil near the water's edge. Pin oaks like acidic soil, and I figured that the murky soil would be just the right place. I set them so that when I walk the mowed trails coming from the south, the sunlight shines on their leaves and shows off the deep red fall color. They surely did not disappoint me this fall. The tree gives a brilliant show. Not only that, but they have grown. They must be 18 feet tall. So they must like it where they are. When I parked near the pond, having crossed the creek and hay meadows, ducks flew up, and a wood duck as well. The wood duck circled as I stood quietly, but the other ducks just flew off, followed then by the wood duck. It was a beautiful, sunny afternoon. A big cottonwood behind the pond, with buttery yellow leaves, stood out against the blue sky. The small pond lays between two small native grass meadows, one of which, the larger one, we cut for hay. The other is allowed to grow naturally. Once in a while it has been burned. The walking trail winds along and then winds through the growing cedars. It's a special place on the farm. I stood there for a while, slowly soaking it all in. Beautiful. I studied different sites to plant Ralph's tree. It needed the benefit of the pond's water. Slight seepage would be good, but I also had to keep in mind that times a prairie bird would or could jump the fence and just race across the small meadow to be stopped by the wooded edge of the bank. In no hurry, I looked at my options and made my decision. There was a small, humped ridge running out of the trees into the pond. It's an open, sunny place and could grow a suitable tree. The London plane, with its love for water, could do well there. And growing there in that spot, it would be seen walking the trail to the pond coming from the south. No fire, prairie fire, would ever reach it there. To reach the spot to plant, I had to go through the woods surrounding that side of the pond or wade through water. I did both, testing my rubber boots. Hey, they didn't leak. They kept my feet dry. I carried the potted tree and the needed equipment, spades, stakes, and wire to keep deer, rabbit, and possibly beaver away. I dug the hole, and some groundwater, pond water, seeped in. It made me stop. Too wet? But I know how much lower in dry times the pond's water level is, and I decided to plant there anyway. And so I did. I staked, placed the tomato cage, and netting carefully. Now the tree, Ralph's tree, can grow. In my mind, I see a big tree, like Ralph was a big man.
Gus Vander Hoeven of Kansas State University with his weekly commentary on rural Kansas. That's our time for today. We appreciate you tuning in. Eric Atkinson here for Agriculture Today. This is the K-State Radio Network.